Hi, Kristin Cooper here, mortgage broker advisor. I help you finance your home. Mortgage rates have declined from the highest reached last year rates, and you may be wondering if you should wait for them to drop further before making a home purchase. So let me explain why it might be more beneficial for you to act now. So let's look over a couple different stats first. Well, we had a tough summer last year. Interest rates, we hit over 7% on a 30-year fixed rate mortgage. And then in November of last year, we saw inflation start to come down. Now, inflation is a direct impact to mortgage interest rates. So as inflation comes down, mortgage interest rates will follow back down. So we saw rates drop over a point back into the 5 and 6% range. Another couple of things to keep in mind is that we have very low inventory, which means we have very high demand still. And as rates come down and more buyers are in the market, it drives up the prices. Low inventory and high demand. And then when we see low rates, then we start seeing more affordability for people, which is more demand and low supply, which will, well, what we're going to see is prices starting to accelerate probably this spring. And what you're going to see in the expectations by all the top companies and expectators is that we anticipate we're going to see appreciation, not depreciation, of 3% year over year and 23% in the next 5 years. So if you were to purchase a home, let's kind of take an example. A lot of people are like, well, I don't know where to put my money right now, or I don't know if I'm going to buy. We always need to look at return on investment. So if you were to buy a house at 100,000 and you put 10% down, that means you're making a $10,000 investment. So if the home prices go up 3%, that's a $3,000 profit. But the investment is 10K. So really your return on investment is a 30% rate of return, not 3%. We recently received December's pending home sales, and that measures signed contracts on existing homes, and the number came in better than expected, which is likely to happen as interest rates come down. We're also starting to see other housing sales figures improve, like new home sales. And this rebound means that activity is picking up and will likely only increase from here as rates stay stabilized and if inflation numbers continue to come down. So instead of waiting for a better tactic, it would be to really look and see what your options are to purchase today when it's less competitive and more room for negotiation, although we are starting to see that trend change a little bit with less negotiations. But this is going to help you get the best deal. And if rates do move lower, you can likely refinance your loan and benefiting from lower prices today. And as a client of mine, you get a lower cost option to refinance in the future. So not only do I broker and I shop over 80 different lenders for you to make sure you're getting the best pricing today, you're also going to get even better pricing when we are able to refinance you into a lower interest rate. So keep that in mind. Also, you want to check out and see if you're eligible for Prop 19. If you're over 55 or you are disabled and qualify, you may be able to, if you own a home right now, you may be able to take that exemption and take your current tax rate and then get a lower tax basis on the new purchase. So if you're over 55, give me a call. I'm happy to look up those options if you're looking to sell and buy another property. So don't wait. Kristin Cooper, I'm here to help you all navigate this process, but keep in mind that market update right now is that rates are back down from where they were at the sevens. We're in the high 5, 6%, expected to hopefully see those continue to trend down by the end of the year into the fives. Housing prices are starting to show some stability, and then we are expected to see appreciations because, again, as prices go down, there's more buyers, low inventory, we start to see prices go up. So if you're thinking about buying and you've been waiting, keep in mind of what you're paying for rent that you are losing every single month as well. So you always want to factor that in as well. A lot of people think, well, if the home prices drop a little bit more, but actually if you're paying rent, all of that money would have been lost. So even if you were to buy and the home prices came down a little bit, you probably would be even, if not still better, purchasing a home. But a lot of information. I want to run the scenarios for you to see if it makes sense. So if you or anybody you know are looking to buy, sell, or refinance, please pass on my information.